Hi traders, good morning, good afternoon, good evening. I hope all of you are doing good. In today's video, we will do a continuation of our earlier video and we will try and cover more points related to price action analysis. And we will try to cover trend lines today. We will try to cover Fibonacci retracements and how to draw and identify zones without using any indicators. So let's get started. I am on a Nifty chart right now, if you can see. So for all the people who are new to analysis on the charts, if they go to a trading view terminal like this, where you can get to see the charts, historical charts of any stock or any index, you will be able to see a chart like this. And there are multiple time frames available. This is 3 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour, day, week, month. Okay, so like this, whichever time frame you want to analyze, that you can choose to analyze depending upon your uh, style of trading. Okay, a lot of people want to do it intraday, so intraday you should use 3 minute, 15 minute, 30 minute, 1 hour, and broader time frame will be daily. But if you're doing an investment point of view, then weekly, daily and monthly will be your right choice, and your entry should be on the 1 hour time frame. So that's how you define your timelines and analyze. So if you can see, just simple price action, what do you see? Let's go till the time 2008 is what we have here. Let's go to a index chart. Okay, you can see this was the period where it has consolidated for longer time. That means from 92 till about 2003 June, till this entire period it was in consolidation phase. This is Nifty index. Okay, and from there it started moving up. Okay, so what we can simply do is we should go to a point where it started moving up. So we will go till the origin point. Okay, origin point, and try to touch upon this origin point and then see where we can draw the trend line. Okay, so this is your longer term trend line, because you started from here. This is your second touch point. Third touch point didn't happen. It may happen in the future, we don't know. So this is one longer period trend line. Okay, so now let's go to a higher time frame, maybe a monthly. You can see this is exactly the same trend line which we have drawn right now. So this appears like this. So it is way far away from the trend line. So now let's go to a daily time frame. So daily time frame, you will be able to find lot of multiple entries here. So this is your touch point. From here you can draw another trend line which is on a lower time frame. See where it is touching. Okay, so this is your another trend line which is touching the second point. Okay, so this is another way of doing it on a lower time frame. Now if you go to a daily time frame, you'll be able to find more such periods like this. So now you can see we are on a daily time frame. So daily time frame, we have got one touch here. Okay, and if you draw a trend line from here, there has to be another touch point which can be a shorter term trend for you. So let's see. Okay, so this is your daily trend line. So if you zoom out, so you'll be able to see multiple trend lines appearing on a same chart at a different time frame. So these are different levels where you want to trade. For example, on a daily chart, if it comes to this level, then it's a good point for you to buy. So that should be your understanding. Now let's go further down. Maybe we can go to a 1 hour time frame and see what's happening. So 1 hour time frame, we are still consolidating. We have not made any point where you can take this trend line up to. Okay, so we have to wait for it. If it reverses from here, then this point becomes a touch point for us where it can reverse. So like this. Now coming to your intraday trading. Okay, so these are the points where it is best for you to invest for long terms. Okay, so these are the levels which you need to keep in mind. So this line should be there on your chart whenever you analyze any particular chart, which are the levels from where it has turned. So now if you are wanting to analyze this on a daily time frame, on an hourly time frame, and want to take out levels for your intraday trading, what you can do is you can use a horizontal line and see this is the high point, which is 18,116. Okay, so whenever you see a zone is not a single line. It is always a point where the price must have got rejected multiple times. So this is the place where it got rejected multiple times, and if I go to the left also, you will be able to see multiple. There is a gap here, there is a drop here, so you will be able to find a lot of sense which I'm trying to make. So like this, you will be able to see from where it has got rejected multiple times. Okay, so now is there any other previous high here? There is one high here. You can mark this as well. Okay, so that we come to know that in future, if the price crosses this level, where is the next resistance? So there is a resistance at this level, there is a resistance at this level. So this is pretty clear on a hourly chart. So now you see there is a gap here. Okay, so there is a reversal here. There is also a reversal at this point. So now these kind of reversals are very important for intraday tradings. Okay, so now you go to a lower time frame, say 15 minutes. Okay, you have got this zone. In 15 minutes you can see the price has reversed from this zone. So earlier this was a support from where it has gone up once, twice, thrice, and then it broke this level, directly opened below this level, and then it came here. First time got rejected, second time it came, got rejected. Now if any point of time again it comes into this zone, you can expect a round of rejection. So it can make a lower low on Monday. It can drop below this level, because you can see this was on the left, this was the lowest level for us. This was the lowest level, right? So if it drops below this lower level and takes a support in this gap, okay, there is a gap here, take a support in this gap, then it can move up. The first resistance will be this, and if the trend changes and if it continues to go above this level, then the next resistance will be this. So this is how, without using any indicator, just looking at the price from where it has reversed or where it has taken a support, you can make your own conclusion and trade at only those points. You wait for the trade. If you see the price is opening here, you can go for a short, and if you see that the candle is closing above this level and it is continuously holding at this level, then you can take a long with a stop loss below this, so that you can target can be this. So this is a very simple way of trading which you can do. Let's go to a much smaller time frame for scalping, like 3 minutes. So 3 minutes also, see if the market opens anywhere in this zone. What would I do? I will wait for the candle to close, and if I see any first red candle and then a green candle taking out the red candle, then I will go long immediately with my stop loss below this. So that's how you have to think and plan your trades. See this beautiful move here. It opened at this support. Okay, it dropped, took the support, shot up, hit the resistance, and from there it started dropping. Now it is at a support level. This is also a support because the previous low was here and it stopped there. Okay, so now after, see there is a I will also explain you a concept of retracement. Retracement always happens at different levels. There are different retracement levels which you need to keep in mind. So we will do this especially on an intraday, which you can use the same concept on daily, monthly, weekly time frames. Okay, so what we need to do is we'll just get away with all our drawings from here, and let's take this chart and try to analyze. See, this is the high point and this is the lowest of the point, or let's start with this point. This was the lowest point, okay, and this is the highest point. Okay, so now you go to your trading view or pick up this Fibonacci retracement and mark the lowest point with this, and then mark the highest point. Okay, so I have changed my settings so that the axis can be on the right with the levels which I want to see, so it doesn't come as a distraction in between. So here you can see this is the lowest point, this is the highest point. Now 50% level is the most critical level for us. Just a second, guys. Yeah, so this is a level which is very important for any kind of retracement. So always think that whenever there is a fall, there is always going to be a retracement at 50% level, heavy fall. If the strength is not there, then the fall can come up to this 23% and go away from here. Little medium strong, it can come till here and move away. If it is very strong, it can come to this level and go away. But what happened here? Okay, so if you see, this level was holding for quite some time and then it broke this level. Okay, it dropped. Okay, then there was very less support at 61%. Again from there it dropped. Then it crossed 78%. So whenever it dropped 50%, then you should always change your mind that the trend has changed because it has gone too far. If it breaks 50%, comes to 61.8, then it has gone too far, and there is very less likelihood that it will reverse from this from this reversal point. Okay, so now the price is at about 78.6%. it is consolidating here and then it is closed below this level, which is 78.6. Definitely the trend has changed. So now you can see the trend is, this is lower low, lower high, lower low, lower high, lower low, lower high. Okay, and then there is, after this point it has not formed any lower low. Okay, so there is a consolidation which has started from this. So even if it moves in this direction for some more days also, this is possible, or it can open directly below this level on Monday. Okay, or it can open higher also. There are two possibilities depending upon the global conditions. Okay, so for taking a conclusive step, we can look at this on a daily time frame. What is the price doing? The price has actually taken, it's not taken the low of the previous day, it is still holding the low of the previous day. So this low is very critical for us. Only this, if the low is broken, then we can expect the market to fall into this zone of consolidation. It can stay in this zone. I'm taking Nifty as an example so that you can understand this, but you can do this concept on every stock, every index, whichever you want to trade. So here the still previous day's low is intact. The low was about 17442.35. This low is about 17457.40. So this low is intact. This low is broken, then we can expect the market to come into this zone. Okay, so this is how you draw your Fibonacci retracements, and always have your plan ready when if you want to trade. If you're seeing this fall, okay, you can if it is a day and just forget all this. Okay, just forget this day. Only the market started from here and it went up. Okay, so then you put up the Fibonacci retracement from here. Okay, I'll delete the previous one. Let's put a Fibonacci retracement from here till here. So what do you see? You see where is the 50%. Okay, you see for the 50% entry. So you have to wait for the price to come to this level and give you a sign. Say this is a red candle. It should make a green candle above this red candle, and that will be a good entry point for you to go long and put the stop loss below. So in this case, it has actually not taken the high of this candle. It has started falling further. So immediately after it crosses a 61.8% mark, you should be thinking of only shorting the market or buying a put. Now, whenever the trend continues, you'll always find a lower low, lower high, lower low, lower high, lower low, and lower high. Okay, so here what happened is it has not made a low after this low, and it made a higher low and then a higher high, then higher low, then a higher high, then a higher low. But again, this is not qualified. Again, it changed from here, the drop. Okay, so this part is confusing for any trader. So we have to wait and watch if it opens here or it opens here, looking at the global condition. And then if it opens here, then we can assume that this ignored this part and continue with this trend upwards. If it opens here, then we have to ignore and continue with this trend which is going down. So there is a lot of manipulation will also happen. There are machine learning softwares which are working against you in rigging the patterns so that you don't get a clear visibility. So that's the reason risk management is the key. So no matter what trade you take, you always lose 1% and win 2%, then you'll always be in profits. Okay, 1:2 is very important because you need to factor all your costs of doing that business. Trading as a business. Okay, 1:2, 1:3 is a great thing. So you have to have a strategy where you lose less and win more. So that's how you're going to survive in this market. So this is about Fibonacci retracement, and in the next video we will try to show you some more patterns, how to do pattern trading, and mostly the patterns and all the other stuff. The more deeper you get, it is all related to one kind of setup which I have shown you in the previous video. So even if you practice that one setup, I think you will be able to make money. Do not look out for too many things at a time. Just take one simple thing where you see that your risk to reward is like your entry is this, and then you go up. So you can bet on these kind of strategies where your entry is this one and your loss will be only this candle. And if you gain, see the gain here. If you gain, the gain will be this much. But if you lose, you're losing only this candle. So this is the kind of risk to reward strategies you need to follow. So here your stop loss hit. Here also your stop loss hit. Now here your stop loss didn't hit here. It went up. It gave you money. And even now, if you had stop loss here, it has not hit. So like this, you can have a simple strategies to work on. So that's it for this week, guys, and I hope you like my videos. and start learning from this is because these are the things which you get to learn if you are joining any paid course. These are the techniques which I have learned by spending a lot of money, I've joined and learned from a lot of institutions, got certifications from there, spend a lot of money in terms of understanding technical analysis, in terms of understanding options, understanding commodities and currencies. Everything I have spent money, and I am trying to educate you free of cost on this. So definitely you should like and subscribe to the channel so that you can keep getting these updates. Thank you so much for watching and have a great day.